our next topic is going to be building your corporate treasury with Bitcoin. We've talked a lot about the taxes, the wallets, you can accept Bitcoin for your services, you can buy it directly, you can sweep a percentage of your funds into it via, just an auto deal. You can do it corporate, you can do it individual. We're going to have people who are better equipped than I am to talk about it. So we'll have Riley Combs with Bitcoin Well. He is the one who is sponsoring the coffee, so thank you, Riley. We'll also have Stephen Cole with Save with Castle, and then Professor Durrell, University of Tampa, and the proprietor of Economics. So, gentlemen, take your seats. Give them a round of applause. So I think this is probably the more actionable panel of all the things. I mean, custody is obviously important. We need to know how to account for it. But how do we get this thing on our balance sheet, and what do we do once it's there? So Riley is a relationship manager, executive
Bitcoin advisor.
Executive Bitcoin advisor at Bitcoin Well. Stephen is the CEO and co-founder of Save with Castle, and the professor here is a PhD economics professor at the University of Tampa. He's written several papers on Bitcoin, including the true supply of Bitcoin. And recently, Bitcoin for Endowments white paper. So, gentlemen, please, if I missed anything, introduce yourselves and let us know what else we should know, and why do businesses need to get Bitcoin on their balance sheet, and how do you help with that, Riley?
Yeah, absolutely. So again, my name is Riley Combs. I'm the Executive Bitcoin Advisor at Bitcoin Well, and I serve on our Bitcoin Well Infinite team, which is our private client service OTC desk. And so just a quick background, as some of you may not be quite familiar with Bitcoin Well. So we're a company that started out of Edmonton, Alberta, Canada back in 2013, and our founder and CEO, Adam O'Brien, got us up and running as a Bitcoin ATM provider. Fast forward to 2020, we kind of hit our ceiling at that. We wanted something that was a bit more convenient, so we launched our online portal dashboard so people can just buy and sell Bitcoin in the privacy and conveniency of their own home. And then we went public actually in 2021. So we're a publicly traded company in Canada, and we're actually North America's first not only publicly traded Bitcoin exchange, but we're also completely non-custodial as well. So that's another way that we really stand out amongst some of our other great competitors. And then we got into the US market, and so that's why I am here today. I'm actually based out of Indianapolis, Indiana. Come down to Florida quite a bit, so that's how I've gotten connected with Bitcoin Bay throughout some time here, and so really excited for this conversation. But when we launched in the US, we also launched our Bitcoin Well Infinite division, and so that is what I manage day to day and meeting with clients, whether those be individuals, family offices, all the way to businesses that are looking to buy Bitcoin.
Great. And we, again, another service that we personally have used is Bitcoin Well. It's great because it goes straight into self-custody, which is something that we really appreciate here. Stephen, please.
Yeah, thanks for having me. So I'm Stephen Cole, co-founder and CEO of Castle. Castle is a relatively new company in the Bitcoin space. We onboarded our first business about 1 year ago, and we are an on-ramp for Bitcoin that is purpose-built for SMBs, so small and medium businesses in the US. I've been in Bitcoin since 2013, spent the last 5 years or so in venture capital, and the focus of the investing that I did in the VC world was on the Bitcoin ecosystem for early stage companies. And outside of my sort of full-time investing focus, I was always enthusiastic about trying to get adoption of Bitcoin in the real world. You know, my coffee shop, my sushi restaurant that I would frequent, I would go to them and try to get them taking Bitcoin as payment. A common challenge in that was it was really hard for merchants to figure out that landscape of what tools to use and trust, how to set up a wallet, keys, and so forth. And even if they went through all the trouble of doing that, I was sometimes like the only person who would ever pay them in Bitcoin. And they just wouldn't have a lot of the volume coming their way because of how early it is to have both sides, the business side and the sort of end customer, ready to transact in Bitcoin. So at Castle, we are trying to just kind of put all the control on the side of the business owner and the merchant and allow them to make it seamless and automatic to allocate to Bitcoin and to build a treasury. So we wrote software that integrates with a lot of the payment and bookkeeping systems that are already used and trusted by businesses. And examples of those are like QuickBooks, Shopify, Clover, Square. MindBody is a big one in the fitness and gym and wellness space. And so if businesses out there are using those platforms, they can link up in a few minutes their existing account to Castle, and we just give you a slider bar that lets you choose how much of the money you're making you want to allocate to Bitcoin automatically. One pattern we also saw was when we would ask business owners, like, how much of the business's money would you be comfortable putting in Bitcoin? The answer that we would usually get back took one of two forms. They would either say, oh, I'd put X percentage of our revenues or our profits into Bitcoin. Or maybe I'd put Y percent of our balance sheet into Bitcoin. But really, to do either of those two things required manual work. It was like someone had to go and look at spreadsheets of how much money you made and then go click buy buttons or try to set up recurring buys that sort of approximate what you expect to happen. And so we thought, let's just build software that integrates into these systems, gets visibility into those revenues and those cash flows, and then you can dial with precision the amount of exposure that you feel is appropriate for your business. So that's what we're about.
Yeah, and the automated aspect of it is really the powerful part, because I've onboarded some people on BISC. If anyone's used the decentralized exchange, they don't keep buying Bitcoin. They buy it the one time I make them do it, and then they don't keep doing it. But if it's done automated and it's a set and forget, I think that's really what unlocks the access to it. And so, Professor, how do we work with businesses? We talk with people about why to build a treasury.
Yeah.
They're obviously the how.
Yeah.
The business wants to put 10% into Bitcoin. They want to put 1%. How do you work with businesses to decide how much is actually a good amount and way to think about building your treasury?
Exactly. You asked the key question, why? So we have to solve the problem. We're all here for the same problem. If you understand the why, if the why is clear, the how becomes easy. So what's the problem with this? It's dying. The dollar is dying. Cash is trash. We all have the same problem in here. We all have the same problem. It's the banksters and it's the government. Whether we have a business or a family, every time the government prints money, they're devaluing your dollar. And they'll tell you that inflation's 3% annual CPI, 2 or 3? CPI.
There you go.
There you go. 100 bonus points.
That's a new one.
So every time they print money, they're in effect stealing from you. So we all have the same problem. We're all here for the same why. And I love how symbolic it is that we're here in Bank of America, surrounded by bank buildings. So I teach Bitcoin economics, Bitcoinomics at the University of Tampa. These are some of my star pupils over here. They would love to talk to you about internships, etc., anything, or just orange pill you. Any questions about Bitcoin? So I'm an economics professor. That's my full-time. And me and Wes have linked up over the past year, and we've created Economics Consulting to solve people's problems about Bitcoin. We create Bitcoin treasuries for corporations. We just finished one for a real estate company, providing balance in that portfolio between the digital and the physical realm. We bring energy. If you have a boss or if you have colleagues that don't get it, what you're saying about Bitcoin, they think you're a little nutty for telling them about Bitcoin, we bring the energy, we bring the credentials, we bring the facts and data, and we put on Bitcoin orange pilling events, Bitcoin days. So we solve problems with Bitcoin. We don't touch your money, we don't take your money, we don't charge fees. We are Bitcoin consultants, and we solve problems. The primary one is the dollar. Bitcoin is not the only solution, but it's the best solution that we've found so far.
Yeah, and if you find that your CFO thinks you're crazy, what better to do than bring in 2 more crazies?
With PhDs, though, we can back it up.
Crazy with a PhD, but that isn't, I think you touched on something there. Is whenever, for example, I'll be dealing with somebody, or my own father, for example, I'm banging the drum. I mean, how many of us can relate? Like, you're the one in the family banging the drum, and then somebody comes and is like, oh hey, like this Bitcoin thing's pretty cool, and they're like, really? Is it? You just sometimes need the outside person to tell you, like, yeah, no, like, they're not crazy. We're equally crazy anyways. But like, whenever like you're the one, if your CFO is like, I'm not touching this. Your accountant says, I'm not touching this. It's crazy. I don't want to deal with it. Have you guys seen this in your world, and you're trying to onboard a business, onto using Castle? Are you bumping into these business partners that are like, we're not touching this, we're not doing this, and you're like, look, it's actually okay here?
Absolutely. It's a very real challenge, and I think it's just a function of how early we are in this. Bitcoin is 16 years old, but it's still relatively new and just not well understood. And so what we see is most of the early adoption and the easy adoption is from situations where there's 1 or maybe 2 decision makers, one business owner or a couple of partners who can do a deep dive and then decide to press go on this. It takes a lot more time. It's a much longer sales cycle when it comes to corporates, mid-market and above, because you have CFOs, treasury teams. Even if you get buy-in from some of those, there might just be practical elements of the tool set that they use and that entire departments within those corporations use that don't yet interface with this new world of Bitcoin. And so the challenge of getting so many heads to nod is very real in this ecosystem. But we truly believe that there's 34 million businesses in the US. Every single one, I believe, will hold Bitcoin within 20 years.
No question.
Might not be 100%, Bitcoin allocation, and it might not be that the dollar's a thing of the past at that point, but I think every single business will be off zero within 20 years. And I see a lot of parallels to the early days of the internet, where if you think about 1993 or 1994, the internet was kind of this new, uncertain thing, and businesses out there might have told themselves, well, Silicon Valley's doing that, and some companies are doing it, but I don't need to worry about it for my business because we're not a computer company. And this internet stuff it's a computer thing. But it turns out the internet was so transformative that every business needed a strategy for the internet. And I think the same is true for Bitcoin, where we upgraded our information technology in the mid-90s by adopting the internet. And if you were one of the first businesses to do so, the first to have a website, email, social media, you just had a huge leg up on your competition, whatever industry you're in. And I think we're in a similar place now where we have the potential to upgrade your monetary technology from dollars or bonds to Bitcoin. And the earliest to do so will just be much better positioned for the future.
Yeah, it's not an option. Like you said, it's not going to be necessarily 100%. You look at the company strategy, Michael Saylor. Do we recommend that for a Bitcoin treasury? No. That's a systematic risk to our whole ecosystem. And we need a new face of the movement. We need to identify this right now because that's problematic. It's 0% in Bitcoin is not the answer. 100% in Bitcoin's not the answer. It's somewhere in between. And we figure out people's risk tolerances. Because like we said, it's not an option. You adopt this thing and you evolve or you become extinct. You want to survive and thrive in the digital age? You need Bitcoin. You need the realest, hardest digital money for the digital economy. Every day, the economy is getting more digital. That's just a fact. The technology is advancing and progressing. And Bitcoin is the solution in many ways to many of those issues that come up in the digital economy.
Yeah, and so Riley, we were driving back over the bridge the other day, and you're talking to a business owner who wants to buy Bitcoin now. In your world, are you seeing more business owners starting to come in and be like, all right, I need another option here?
Yes, absolutely. Yeah, you saw this firsthand yesterday as we were driving back from the office to downtown Tampa, and I'm meeting with a client late on a Friday evening. But so this client is a dentist who is looking, has a meaningful amount of cash reserves just in the bank. Losing purchasing power as the days go by, and they have now been orange pilled by their brother, and they're now looking to deploy that capital into Bitcoin for their dentist practice. And so, to kind of answer your question, yes, we have definitely seen an increase in interest and demand with clients that are reaching out to us that are also business owners. I would say for us at least, most of it has still been kind of more of the individual looking to buy for just themselves or kind of trust, family office. But yes, the businesses adoption has definitely been increasing. And as Jordan said this morning as well, that is what I am more bullish on than all of these zombie companies that are raising cash and becoming Bitcoin Treasury companies.
Yeah, I mean, so you had just mentioned kind of the systematic issue we're seeing here with these companies. I'm just going to pull up the Nakamoto. Oh man, I was hoping it'd be a little bit bigger. The Nakamoto price chart here. So this is what we in the business call a shitcoin. This is why you just buy Bitcoin. These are the digital asset treasury companies, these zombie companies that are doing nothing, and they're hoping that they can, catch lightning in the bottle twice while sailors still holding on to it. Metaplanet, was the second one. The diminishing returns are right here.
Yeah.
This is what's in store for companies that are not cash flow positive, that don't actually have a core product to offer. You will not turn your company into a Bitcoin treasury company and try to dump your shares on the market. It will look like this. This is run by the biggest, most popular person in, I already kind of got in trouble on whenever I sent the email out for when the Bitcoin, I don't know if you guys, whoever's on our newsletter saw the story of the Bitcoin payment failing on stage, and I felt bad. I didn't know Craig was in there. He was like, "Why'd you guys do me dirty like this?" But this is one of the most notable figures in Bitcoin, one of the largest companies in Bitcoin, and this is what happens whenever you are just going all in on Bitcoin and trying to use that to juice your business. You need to have an actual business with a product that you sell. This is not just something you just go on Bitcoin and get rich. If you did that in 2017, you would have gotten rich and you would have gone broke, and you would have gotten rich and you gone broke. So the mega returns, are kind of gone for the moment. But so this is what we mentioned when we talk about digital asset treasury companies, these zombie companies that you just mentioned.
And if I could add on to that too, yes. One dynamic that we've observed, so today on Castle, most of our customers are small businesses, family-owned, like restaurants, single-location businesses, and we're in dialogue with more mid-market companies that have treasury teams and CFOs and so forth. And for those teams, those sort of finance professionals who are not super deep and plugged into the Bitcoin ecosystem day to day, they kind of follow all of this at the headline level. And what is really, getting all the spotlight at the headline level is this stuff. It's the digital asset treasury companies that are going all in. In some cases, they're using leverage, and it creates the perception that, oh, well, that's if we're going to do things in Bitcoin, then that's what it looks like. We have to kind of bet the farm on it, and that's just not true at all. It's a very extreme end of the spectrum, high risk, high reward. Maybe if some of these companies time this well, it will work out in their favor tremendously, and they'll be the Wells Fargos or JP Morgans of the future. But a much more just sort of better risk-reward approach to this, we believe, is gradual accumulation of profits and cash flows over time, where your position is much more resilient. And that's just not really as talked about and understood yet, because there aren't many big examples of corporations doing it yet. But I believe that will change.
Yeah, it's about risk, and it's about, like you said, we don't want to be extremes. 100% Bitcoin wrong, 0% Bitcoin wrong, 5%. And maybe your boss, maybe your colleague says that 5% Bitcoin is risky. Okay, two scenarios. They're a no-coiner, you're a Bitcoiner. They say Bitcoin's going to 0, you say it's going to 1 million. We know it's going to 1 million. but we're going to placate them. We're going to just go through the thought experiment. Okay, you put 5% of your $100 million in cash. You put $5 million into Bitcoin, 5%, and Bitcoin goes to zero. That's risk. You lost $5 million. The other option is you put 0% into Bitcoin of your 100 million instead of the 5%. Bitcoin goes to $1 million. Bitcoin 10x's. That 5% you had on your balance sheet that you chose to just keep in cash, that 5% could have gone up 50%, become 50%. So if you don't have any Bitcoin, that's the real risk. Bitcoin is risky. Not having Bitcoin is even riskier.
Yeah, and just to kind of add on that, that chart, and unfortunately there are other examples of that as well, but that act of, gambling essentially for, you as an individual, your family, or your business, that speculation is just how you get wrecked. That does not protect your family, that does not protect your business, and so, like Wesley said earlier, I think, there are a lot of sayings in our space, and, one of them is just, stay humble and stack sats. And also, for our, even our own company, Bitcoin Well, we have our Bitcoin Treasury as well. And so for us, we obviously have operating revenue from, our service, our, portal volume, our ATM business. And so, we kind of stick to that of stay humble, stack sats. As revenue comes in, it's revenue plus Bitcoin equals independence. And that is really how you can future-proof your money and ultimately future-proof your family's wealth and, in this scenario, future-proof your business as well.
100%. I like that, what you did, that equation you just gave us. Because, that's my experience. I started accumulating Bitcoin in college. I had a job. I was making like 50 grand a year in Boston, which is not a lot of money, but I'm plowing into Bitcoin. I'm getting as much as I can. And by the time I'm 25, I got a house, or I got a nice fat debt on a piece of property that I'm allowed to stay in. And then we started a business. And for so many people, especially my age and younger, 29, I just turned 29, that is so out of the realm of possibilities for people. Being able to save enough to afford a house, being able to have the freedom to start your own business. And people say Bitcoin's freedom money. That's why we have Fix the Money, Fix the World. the money is so broken, he's willing to tear it up and throw it on the floor. I remember being in high school and the rich kid would spit his gum into a dollar bill, and I'm like, what? And
this was the new one.
Yeah.
This is the new one right here. It's trash too.
no, he's not tearing that one up though.
We'll see. 1971. 1971, middle of the year, April. 1 ounce of gold. How much is that worth?
38,000.
In 1971.
Is it 38
in April.
dollars?
30. We'll round up. Who said 40? 40. They're the winner. That's the winner right there. It went from 35 to 45 that year. Middle of the year, $40. What is it today?
42,000.
4,000.
Yeah, let's just say 4,000. It's more than 4,000. So, did this become 100 times more valuable, or did this become trash?
Yeah.
Did this become 99% less valuable?
Yes.
Put that in your head. Shift your paradigm. That's the why. That's the problem. That's why we're here. CPI, government, lie. Gold is the truth. Gold is the standard. This is the inflation rate right here. And we saw this, we don't have to take it back to 71. Take it back 2 years ago.
Yeah.
Oh,
$2 grand.
$2 grand.
Yeah.
$2 grand. What's happening here is the great monetary reset. We're living through it. It's an exciting time, it's a dangerous time, it's a risky time. And the real risk is staying in that. Staying there and hoping that things change, hoping that things are okay. But people need to understand the dollar is being revalued. This is a mass revaluation scale. Bitcoin will be worth $1 million within 5 years, I guarantee that. Question is, will the government try and take it from you? That's another topic.
And how much is a gallon of gas?
And how much is the gallon of gas? So the dollar will be backed by Bitcoin. Bitcoin, are they not making it clear enough for you? The Bitcoin standard, digital gold. You think that guy's making some decisions, Larry Fink? You think he knows something? Digital gold. He's literally telling you the quiet part out loud. Bitcoin is the new digital gold. Bitcoin is the new collateral. Bitcoin is the new base layer for the digital financial economic system that's coming. It's just a fact. That's all we do. You know, when we're staying up at 2 a.m. having some whiskey, what are we talking about? Stuff like this.
He's the
all
exact same
we
person
do.
if he was on
It's
stage
all
in a
we do.
suit. As students, I'm sure will agree.
So you get on board or you don't. We're preaching to the choir. You guys get it. But at Economics, we help you overcome the problems and implement strategic, I don't even want to use that word, Bitcoin Treasury. I don't want to use that word anymore because of Michael Saylor. But we help you integrate Bitcoin into your family, into your personal finances, into your business to solve problems. Bitcoin can solve a lot of problems, whether it's Bitcoin endowments, you know, on your balance sheet, Bitcoin has payments. Bitcoin will solve problems that the dollar creates.
Amen.
Well said.
There you go. Yeah, and you know, so we've spoken about the volatility of the Bitcoin price, you know, a little bit over the day, and you know, we've touched on how it's the dollar that is experiencing a lot of this volatility. If you look back during COVID, whenever beef shooting, copper, lumber, whatever, if, you know, you saw these prices swinging wildly, and you change your denominator to over Bitcoin, over gold. Those are a lot smoother graphs.
Yeah.
So I'm glad you brought up the little prop. You know, like I think a better way of valuing Bitcoin is BTC over GLD.
Yeah.
You know, like it's a change in mindset, but it gives you. I forget what the term is for like the changing ruler size. Like you can't build a house with a yardstick that isn't staying the same length. And Bitcoin has a known inflation rate, mathematically proven. Gold has a fairly standard inflation rate, a stock to flow ratio. I think we're able to, you know, kind of change our denominators around, you know, using Bitcoin over gold, gold over Bitcoin. You know, that'll help kind of smooth out the curve and fix the volatility issue. You know, so when you guys are dealing with potential clients or customers for, you know, the Bitcoin integration to their business, their family, you know, how much are they worried about the price fluctuations? I mean, how much, like, are you having to be like, okay, look, just dollar cost average, you know, because I know Bitcoin Wealth Infinite especially is, you know, typically a larger purchasing segment. But so how do you explain that to your clients?
Yeah, absolutely. You know, it's definitely a concern for some folks. I think based on how our company is structured, being non-custodial, I think we do kind of weed some people out. And if you're coming to us, you are definitely like well into your kind of orange pill Bitcoin journey, and that's exactly why you want to use a non-custodial exchange. So then you are just taking ownership of that Bitcoin after it's been purchased, and you know you have that in your family's treasury or your company's treasury in a very self-sovereign way. And so, but of course, you know, from time to time, especially when maybe we're talking shorter periods of time, so you know maybe a month or a quarter, yes, there can be some volatility. And honestly, the picture that I paint for most folks is the Bitcoin's price volatility is just a reflection of what's going on in the fiat clown world. Again, just kind of, you know, adding to, you know, Professor's point, you know, the underlying denominator is staying the same. It is just a reflection of that is becoming more and more trash, just like in Venezuela. You literally see cash in the streets and people are burning it to stay warm because it is that useless. And so that's just kind of how I handle that conversation. And really, too, kind of going away from talking about Bitcoin in dollar terms and talking about it in Satoshis or, you know, Bitcoins themselves. And it's like, do you have more Satoshis today than you did yesterday? Or do you have more Bitcoins, you know, this year than you did last year? That is kind of how I handle that conversation of thinking about it, you know, going back to that unit of account and rather than thinking about just useless dollars.
Yeah, agree with that very much. At Castle, we try to be intentional about orienting every business owner on our platform around Bitcoin being a long-term savings technology. And every part of our product is designed to encourage that. So you will never find a candlestick chart with like red and green, you know, 5-minute lines anywhere in our product. It's very much oriented around consider this the next generation savings account. Don't consider it short-term cash management where you might have immediate liquidity needs.
Yeah.
Try to find whatever percentage works for you and your business that you can consider a long-term strategic allocation that ideally you won't have to touch for a multi-year time frame. And if you can do that, then volatility, you're calibrated for it correctly. There's a great Bitcoiner named Justin Moon, and he had a fantastic post once upon a time. It was a little bit tongue-in-cheek, but he said, if the volatility in Bitcoin bothers you too much, wait until it's $10 million per Bitcoin and then buy. At that point, it'll be far less volatile. But what you will have missed out on is a lot of opportunity along the way to be part of this journey of Bitcoin becoming the new monetary base layer and benefiting from it.
Professor, if I may, and I was trying to see if I could find it on LinkedIn, but I'm an investment guy.
Yeah.
And I saw a post which I deleted.
Weimar, Germany?
But no, it was the S&P 500 versus gold, or in gold.
Yeah.
Mm-hmm.
And it's basically sideways.
Yep.
And I was like, wow, that really, really shows the destruction of the dollar.
What do we got?
Yeah, all sorts of videos.
Yeah, now price it in Bitcoin. And it's
I mean, even this one's $60 now, and this one has a little
What,
Bitcoin
$60?
on it. Yeah. I catch it?
It's silver.
Yeah, silver.
Look at that.
So that's our silver Bitcoin. That's doubled this year.
Yeah.
Did it double this year?
Yes.
Or did the dollar half
Yeah.
this year? It's we're two sides of the same coin.
Yeah.
So what you're saying is the S&P and gold is basically flatline.
Yeah.
Facts. You have the data. Gold is a great barometer, unit of measure. Also, if you're doing charts like that, also show clients like money supply, that M2, the $22 trillion M2. Let's price the S&P in M2. Let's in that ratio. The year 2000, M2 was 5 trillion. Today it's 22 trillion. So about 25 years, roughly 4.5x of money supply. And then you look at that median house price. You look at the S&P growth. They're kind of tracking. It's pretty similar. The one that's not tracking is the median household income. And that's why I'm serious about this. I'm not playing games with this. It bothers me. Wes too. Bothers us on a moral level. This is not this isn't a joke. This isn't just about us getting rich or protecting ourselves. This is about a pernicious system that is extracting the wealth of the working people in America. It's not consensual economics anymore. It's extracting economics. And it's crushing the people around us. We're going to be fine. The people in this room, we're going to be fine. We've got a nice few. I think we're a little better than average in this room. But I've lived in Manila, I've lived in South Africa, I've lived in Brazil. You don't want to be the richest person in a poor place. You want to have a strong middle class around you so you're safe and secure. You don't want to have to be in a tower to feel safe and protected, even though you could be. They're destroying the middle class by printing money. It's about approximately 7% annual. And they're lying and they're saying that it's 3% annual. So the salaries are going up 3% annual. The real inflation's going up 7% annual. It's just money supply. This is their own data. 7% annual money supply, true rate of inflation, 3% annual rate of growth of your wages. You're falling behind 4% annual for the average person in America, and it's morally wrong, and we have to open minds, and we have to wake people up. That's why I love this community.
Woo! Go ahead, Jack.
I've got to follow up real quick, and maybe any type of answer may be way too long for today, but how do you see, we talked about gold, how do you see gold coexisting with Bitcoin and or maybe supporting Bitcoin, all those issues, yeah.
if you want to take it.
I have a profound respect for gold. It's been the most sound form of money for most of human history. And prior to Bitcoin, I was a big, gold and silver, bullion bug. I think Bitcoin is just superior monetary technology, 100x better. And I think it will restore precious metals and really all asset classes, real estate, to its utility value. and it will suck the monetary premium off of those assets, and Bitcoin will just become the device to save, and that'll be a profoundly positive thing for the world, because things like gold or silver or houses can be more accessible to those who want to use them for purposes that are unique to those things. To have jewelry, to have a place to have a roof over your head. You won't have idle capital that is just parked by, big firms that are buying houses in Vancouver and never, renting them out, never occupying them, just using them to store value or evade capital controls. So I think it's going to be a good thing for the world.
Yeah, I guess I love your answer, but simply, we're not seeing companies that are having announcements and say, "Hey, over here, you can pay us in gold." We are seeing companies that are saying, "Hey, we are now accepting Bitcoin as payment," and there's a lot of excitement around that. And kind of the earlier example this morning, Steak and Shake, a fairly large company doing that, and they are already seeing the rewards of that decision. Yeah.
Did they have a new announcement this morning?
No, just kind of the overall.
Oh, I see. Okay.
Yeah.
Steak and Shake has seen like a 20%, 15% quarter-over-quarter growth over this year.
Yeah, I want to make a little side note. There was a really good conference this last week at the Finance Conference. And this debate between gold and Bitcoin came up.
Yeah.
And for everyone in this room, go watch the hour debate between CZ and Peter Schiff. And it's one of the best 6 minutes you can spend. And you'll understand why Bitcoin is a superior asset to gold.
Yeah.
One of the just great commentary. And this argument right here is a perfect description.
And we're not enemies with. A lot of us come from the bullion.
they're
We just want hard money. We want real money.
Yeah.
Yeah, because when we were out in Vegas this summer, who was there at the conference? Peter Schiff.
Yeah.
And I talked to him. I got him to admit, Peter Schiff does own Bitcoin.
Yeah.
I got him to admit it on camera.
Since 2013, actually.
Yes.
He just gets his hits and his views.
It was surreal because you had Michael Saylor, and then 10 meters away you had Safety and a moose. And it was very surreal. So there's different kinds of money.
Yeah.
And not all money is created equal. So gold is great money. Bitcoin in the long run will be the best money. But
It's a better network.
yeah.
It's a better way to
It's for a digital economy.
Yeah.
That's the issue.
But yeah, take the 60 minutes and go watch the debate. It's great.
All right, well,
Really educational, really informative.
we will have a long Q&A session after our final talk with Jason. So please give these guys a round of applause. You never know where these conversations are going to go, especially when you get a professor up here. But thank you guys for sharing your experience. I'm sure people are going to have more questions. We're going to move on into accepting Bitcoin. We've talked about pretty much everything else so far: why, how, where, when, and what. Now, how do you actually get it from me or any of these students that are here? How do you actually get Bitcoin accepted on your balance sheet without just going out and buying it? So thank you, gentlemen.